if the plans for the banking sector come to pass, where they're going to back away from renewables now, and their plan for the future is gas, you're looking at their plan here. Their plan at best will buy us a couple of years, right? So then we need to think of something else.
And then what happens to the price of oil and gas?
So, well, I think because they're so important that the conventional ways of pricing those things will leave the free market, and it will become a strategic asset, and it won't be something that'll be dominated by markets at all, and be more dominated by geopolitical alliances. And that is a world we cannot comprehend just yet. But that to me is the smart money of where we're going.
You're watching CapitalCosm. My name is Danny, and my guest today is Simon Michaux, returning back on the show. Simon, thank you so much for coming on for coming back, my friend.
G'day, Danny. Nice to see you again. And we had a great chat before we lined up. So yeah, let's keep going.
Yeah, I see you've got some really cool updates in terms of the natural resource space, the petroleum industry, and just some overall really interesting stuff that has deep societal impact. Where are we moving? Are we hitting peak oil? Have we hit peak oil? Where are the cards laid out today?
Right. So things are more complicated. My colleague Art Berman, for example, who's an oil specialist, he likes to say what we call peak oil needs to evolve into something else. So what's now happening is our dependency on oil is being overrun by we are now heavily dependent on the gas industry. Now that's a stopgap. I believe we're in stopgap territory. We do have a localized peak oil in November 2018 for crude oil. I've got some information to show that. But we are using total liquids by increasing biofuels and natural gas liquids, which is actually able to do the final job of actually running our internal combustion engine technology. The question is, can we keep doing that? I would say that we are on a plateau, and we've been on that plateau for a long time. We've got a localized peak a few years in the past, although a case could be made that was geopolitically driven. But the message is, that the writing on the wall is oil will leave us soon, probably before we are ready to do so, and we should get on with thinking about what's the after oil plan. The people I presented to some bankers in Westminster in London recently, and they just said, look, okay, your work's all very nice and everything, but you haven't told us anything new that we didn't already know. They said we've actually withdrawing from renewable technology as a banking sector, and we are heading towards the electricity generated by gas-fired gensets. So they want to go back to gas. And yes, we've got plenty of gas if you can pay for it, but gas is also a fossil fuel, and we're also on the downward slope of depleting our resources. As a guess, what we could call peak gas could be around 2035, but that's like 10 years away. And if it takes 20 years to rebuild everything, we really should get on with things. So what I wanted to do today is actually take you through a quick tour of duty of where we're at with the energy sector and with conventional thinking. And what becomes apparent is everything conventional won't work.
Interesting.
And if that won't work, what do we do instead? So I've put together a counter plan. And so what is that plan? And then so I've been calling it the purple transition. But if we were to actually do that, like if someone was to give me enough funding for me to go off and do this, what would it look like? Okay.
And yeah, I think we covered the purple transition in our last interview, unless there's any new concepts you'd want to share as well.
The purple transition, as we discussed last time, are the foundation blocks, but they're all we do this, we do this, we do this. But if we were to build a city based on these new technologies, what would it look like? And if we had energy, what would we use it for, given the not only the problems in the energy sector, but also the resource sector? Like, where do we get our energy from? Where do we get our resources from? Should we be consuming this stuff? Should we do things differently? And that's what I'm hoping to show you today. The start of the discussion of if we were to do it differently based on what we know right now, what would it look like? Or another way to do it, if I sat Nate Hagens and Bill Reese around the table with an industrial investor and me, how do we do things where we are all in agreement that all of our respective fields are actually met? All concerns in all of those sectors are met. And I believe I can now do that, but it requires a radically different way of doing things.
I see. Well, go ahead and take it away. I know you've
All
got
right.
some slides that you want to share.
Okay, rock and roll. Share screen. Entire screen. Share. Okay. Right. Can you see that?
I can.
All right. So what I'm calling this one, this is actually my old consulting. When I was in Australia, I was running a energy consultancy, and I called it Data Consulting Dynamics. And I haven't got around to making a new title slide. But so this is me, Simon Michaux, whiskey disposal specialist, top of hill. So this is the evolution of the energy sector and why current thinking won't work the way we hope it will, but also the presentation of a new idea. I'm here to tell you, though, I'm not here to follow someone else's thinking. I'm not someone else. Like a lot of people seem to want to follow the ideas of others.
Mm-hmm.
So I'm not here to follow the path of others. I'm here to make my own. Those are my footprints at the beach called the Blow at Rainbow Beach in Queensland. So everyone should try thinking for themselves at least once. Now would be a good time. The image on the right is something my wife drew. We're all trying to push the cubes along, and it's getting harder and harder and harder. But if we were to take what we have and refit it into a different version, suddenly things will become a whole lot easier. And that's now where I'm at. So we are told on a daily basis in how much trouble we are, in how much battle. But I think there's a way out of this, and it's not that complicated. Right, summary. This is where we're going in the next 90 minutes or so. Fossil fuels are toast. They'll leave us before we are ready. I also show conventional nuclear, as in light water reactors. They can't expand fast enough to be useful. So I've got a simulation to show you. So people will often say, tell me, "Oh, obviously we're going to go nuclear." It's, well, nice idea, but. So the planned green transition faces serious bottlenecks. I won't go too much into this because it's been presented before, but I do have some new information, case studies. Purple transition, the counterplan. I've now got 2 examples of thorium-fueled a thorium-fueled molten salt reactor. There's an example in China, and it's being commercialized in Europe. The second example is a thorium-fueled pebble bed reactor, small modular reactor. There's also an example in China.
So conventional nuclear reactors can't expand fast enough, but that's not the case with thorium fueled reactors.
Right. So the uranium reactors, your conventional uranium reactors, they take. If you were to get into it and go hard like how the Chinese industrialized, it takes about 5 to 7 years to build one of these massive reactors. But because of the permitting problems, that can be like 30, 35 years to get a single reactor from the point of let's build a reactor to the point where it's connected to the power grid. So, and then you've got the fuel cycle value chain footprint before the feed, and then there's the waste products on the other side. The thorium reactors are small, right? So the factory I went to in Copenhagen, a group called Copenhagen Atomics, they are planning to produce 1 little modular reactor a day out of that single factory. And from what I saw there, that won't be a problem. Once they go, it won't be a problem.
Interesting.
So there'll be, and so if we have more than 1 factory operating, for example,
So you see this. So essentially, you see the thorium reactors going live before a lot of these conventional reactors.
Yes, the conventional reactors are too large, too slow, too complex. They serve a purpose, but I can see we've got a shift coming that is equivalent to when the power grid actually was developed in the US in the late 1880s. It went through a series of complexities and then simplifications. I think the nuclear is going to have something like that. It's going to reinvent itself. It's going to become something else.
Mm.
And like in its current form, it has a number of logistical challenges, and it needs to evolve into something else. What is that something else? Well, I think it's not going to be. There's no one solution that fits all problems. So there's no magic solution as such. But I can see enough action happening in the next generation of nuclear technology to say, yep, this is probably going to work. It kind of helps that the Chinese have just gone and done it. All right, more on that later. So if we were to apply the purple transition and we put it into a city and we applied what we learned, what would that look like? And so this is what I'm putting on there. Promethean Nexus, it has two parts. Promethean Nexus, the development of the long-range plan, but Vulcan Catalyst is the industrial start. As in, how do we start? And Catalyst is an industrial project to sell cheap electricity and cheap diesel fuel. It will secure the land, fund the large industrial assets, and construct the starting seed of the city. So, and what you sort of see on the to the right there is the two logos together. Right, so what's this all about? Now, you've probably seen this before, but primary energy consumption. This is 2024 data. In 2023-2024, fossil fuels continue to supply more than 80% of primary energy, but oil, gas, and coal do very different things. And so we can't just knock them all out with one source. You've got to understand what each one does, and then find a replacement. And so far, the quantity of renewables installed is less than what fossil fuels have actually grown. So nothing's actually been phased out. So yes, we've put a lot of renewables on the ground, gigawatts of installation, but fossil fuels has also grown by more than that. So this was an idea that I first saw Art Berman put together, and I've actually updated it for 2024 data. On the x-axis is GDP for the year 2024, and each dot is a country. So these are all the countries that are in the UN. On the y-axis is oops, I've got the axes mixed there. On the y-axis is total liquids consumption. So the source is the World Bank for the GDP and Statistical Review of World Energy for total liquids. Total liquids is any fuel that goes into an internal combustion engine car. So it's gasoline, it's diesel, but it's also biofuels and it's natural gas liquids. Yeah. The point of this graph is all of those countries together, when you put a line through it, it has an R squared of 0.93.
That's pretty good.
So what that means is strong correlation, high GDP, high petroleum product or total liquids consumption, low GDP, low total liquids, no exceptions. Right, so we're a petroleum-driven society even now. So this is our dependency on petroleum. So this is an updated piece of work from John Peach. He used to work for MIT Lincoln Laboratory. He's retired now. He's in the process of writing a paper with this data in it for oil, gas, and coal. John, if you're listening to this, I owe you more than one beer now when I see you. Right, so oil, most of it was discovered in the 60s and 70s, and we've been producing. The red is the production. Take that same data and put it into a cumulative production plot. So now red is discoveries and blue is production. The green is when you take one from the other. So what it means is two things. 1985 was the maximum peak for inventory. Inventory climbed to that point, and since then it's been declining. Now, not all oil is the same. The stuff we're working on now tends to be more expensive to process and harder to get hold of.
Right. So if I'm reading this chart correctly, the red plot is discoveries, and it looks like it's been plateauing. It's been increasing at a decelerating rate.
Correct.
Whereas the blue line, which is production,
going through the roof.
It's going through the roof. It's not stopping. It's not decelerating. Still going at the same rate. And so the availability versus what's been produced.
So the chart on the left shows you when the stuff was discovered. So most of it was discovered in the 60s and 70s. Most of the good stuff anyway. So the chart on the right, the production midpoint is midpoint for the blue.
Mm-hmm.
So this is 1996. Since 1996, half of all the oil ever produced was produced after 1996. So we're chewing through it faster and faster and faster.
Incredible.
Okay, where are we at? So this chart is from Art Berman from Labyrinth Consulting. He does excellent work. I can recommend him to be someone to talk to, actually. So what we're looking at here is world crude and condensate production. So here's the raw data. So now I'm going to put some things on top of it. A couple of things here. Okay, so November 2018 is a localized peak. So that's our peak.
Mm-hmm.
But you could argue that that was promoted and pushed by geopolitics that actually made that happen. But this is COVID, the gift that keeps on giving. We've actually been on a plateau for about the same as far back as 2014. So for 10 years, we haven't moved off this plateau, in spite of all the money we're pumping into it. There was a point that now oil is all about internal combustion engine transport. So it's transport. And gas, this is natural gas liquids. The shortfall, while demand is going up, the shortfall is being made up by natural gas liquids. And that's actually a part of the gas industry. So we're forcing a shortfall in the oil industry to be made up by an inefficiency in the gas industry. We get away with it for a bit. But what this means is what we call peak oil is no longer as simple as we used to say it is. However, in 2016, the HSBC Bank did a study, and they found that 81% of existing oil reserves are being annually depleted at a rate between 5 and 15%. These are the reserves that are producing oil. So they've got a rig over the top of it, and then they're actually producing. But so the longer that peak remains, and this is a concept by Matt Simmons, who wrote Twilight in the Desert. When peak oil happens, you see it in the rear vision mirror. But the longer that peak stays a peak, the harder it is to beat. So, and now what we're sort of seeing is Chris Martenson recently posted some information to show that tight oil production in the tight oil sector in the United States either is peaking later this year or early next year, as in, the party may well be over next year. We don't know, but someone's going to pull a rabbit out of the hat.
So peak oil in terms of natural gas supplementation as well.
Yeah. So I've got another chart to show the relationship here.
But peak oil, from a pure sense, it appears to have occurred in 2018, like you've elucidated in this graph.
In a pure sense, yes, that is the case. Someone could pull a rabbit out of the hat, and we could breach that peak. But the longer that lasts, the harder that's going to be. Mm-hmm. So what the real takeaway for me here is, the World Bank thinks that by 2050, our transport fleet will be 2 to 3 times the size it is now. And our economic sector will be 2 to 3 times the GDP that it is now. This is growth-based economics. If we have not been able to climb off that plateau since 2014, we're not going to do that. Right? So the prognosis for future growth and development, this is a warning shot. So you've got a possible peak oil there. So what we mean by peak, and this is a subject of hot debate, and when you actually try and chase this information yourself, it's really hard. It's really confusing. And there's conflicts in units and difference in labeling, and in the fine print, you got to look at stuff. And I don't think that's an accident. Because it's harder and harder and harder to get to the bottom of what's happening here. So conventional crude, no fracking, for example, no condensate, no tight oil, no tar sands, no natural gas liquids. That actually peaked in 2005 at around 74 million barrels a day, and it's never been surpassed. So the 2008 price spike drove the price up, but it didn't actually breach that record of 2005. If you include tight oil and condensate, and adds least condensate and deep water, but not natural gas liquids and biofuels yet, we've got the peak at 2018, November 2018, at around 85 million barrels a day, something like that. If you go to all liquids, we're now looking at natural gas liquids, biofuels, refinery gains, all that sort of stuff. We are still inching up. We have not actually reached a peak yet. And so this is what I'm saying. It says, what do we mean by this? So this is a chart that Art Berman put together last year. And he actually sort of shows the blue is crude and condensate. There's our possible peak, and things are declining since then. And we haven't really sort of, we're on a plateau at best. Biofuels is the orange, dark orange, and natural gas liquid derived gasoline is the yellow. And so the NGL is being increased to make up the shortfall, which is why when you put it all together, no one's noticed. Problem is, this puts a deep inefficiency into the oil market, because the oil and gas industry, which you're harvesting both at the same time, this actually will create a vast inefficiency. It's a stopgap measure, and as a stopgap measure, we should probably think about the after oil plan. This is not to say we'd run out of oil. It just means we won't be able to bring as much oil to the market as we'd like. But the whole concept of what we call peak oil has to change. Right, gas. So before I had that chart of GDP versus oil consumption, now it's GDP versus natural gas. And what you find here is very interesting. The R squared breaks down, it's down to about 0.7, but there's two subpopulations here. One population is your very developed and technologically structured economies. Mm-hmm. And the other are your producing economies, or your third world stuff, and they're having their natural resources harvested by the first group.
Right.
You'd have to actually sort of unpack that a bit more.
Have you ran like the regression analysis on both groups separately?
No, I haven't. No.
That'd be interesting to see.
Well, I only did this literally an hour ago.
Oh, okay.
So no, I haven't. But yes, that's an obvious thing to look at. But also the red group up the top there. They're countries like Pakistan and Iran and Iraq and Russia, and these are all producing countries that don't have a lot of industry themselves or structured technology consumption. They're not as developed. So you could say the developed world versus the undeveloped. So whether that actually holds remains to be seen more, but that's what jumps out to me. So here's the same analysis of gas, again from John, thank you. This work that John did about a week ago is probably, or maybe 2 weeks ago, sorry. It's the first in the world I've seen this. So we're seeing the actual discoveries for gas over time. And you can see, again, most of it was discovered in the 60s and 70s.
So it's almost the same problem as with oil. These charts look identical to what we saw in the oil chart.
They are the same. It's just the gas has a bit more time left. So oil, we've got the problem of production. Production is now closing in on discoveries. Where here, production has a long way to go before it reaches discoveries.
So Simon, a quick question. What would someone say who's on the opposite side of the table, who doesn't, what would an energy analyst who's, anti-peak oil say in refutation to these charts you're outlining here? Like, I mean, it seems pretty undeniable to me, but what's like the opposing argument?
Oh, they say, we'll just drill more out of the tight oil sector. We'll produce more. It'll be fine. We've got plenty left. We've got vast amounts of reserves. We haven't begun to tap into them, and all that. It's there's a lot of circular reasoning in all that. And and to be fair, all the way till now, we've been able to bring more and more total liquids to the market with each passing year.
But wouldn't those reserves show up on this on discoveries?
Yes, they would. Yes,
but
they would.
So I mean, the argument doesn't make sense then. I mean, the data is telling us we're declining in discoveries, but they're saying that there's still like this reserve out there, even though the data says otherwise.
So they've got the red on the right here. The red is the cumulative discoveries, the amount of stuff we've got in the ground, right? So how much of that we've got left, and so they're saying there's a vast amount left. We don't need to worry about it. They seem to think, on one hand, that there's the underlying belief that resources are unlimited. / someone will think of something, someone will discover stuff. My thesis is we're out of time. If someone's going to pull a rabbit out of the hat, they better do it quick.
Yeah, because I mean, just by looking at the data objectively, there are literally no. I mean, not literally, but there's no. I mean, reserves are much harder to come by looking at this. I mean, the thing is trailing off.
We are.
I don't know how you can dispute it.
So the green is our inventory. That peaked around 1995. So that was our peak, and since 1995, for the last 30 years, we have chewed through our. We are on the downward slope, and we are consistently on the downward slope. Right. So again, the writing's on the wall. Do we have to wait until things actually run? Supply and demand actually separate before we have a conversation? The midpoint's 2003, about 20 years ago. So half of all the gas that's ever been consumed has been consumed in the last 22 years.
And so, like, from a market standpoint, it seems like the current pricing in both oil and gas is ready to just skyrocket. Like, once
you could say that, but when you actually look at the price chart, oil in particular is heavily dominated by geopolitics. Not conventional market forces. So, but because oil is so important and it's the lifeblood it's the heartbeat of our industrial economy, it's hard to refute that. What I would say is gas has been okay because we don't use that much of it. We've been using it to generate some electricity, and that's essentially it. And we use some gas to produce plastics. But if the plans for the banking sector come to pass, where they're going to back away from renewables now, and their plan for the future is gas, you're looking at their plan here. Their plan at best will buy us a couple of years, right? So then we need to think of something else.
And then what happens to the price of oil and gas?
So, well, I think because they're so important that the conventional ways of pricing those things will leave the free market, and it will become a strategic asset, and it won't be something that'll be dominated by markets at all, and be more dominated by geopolitical alliances. And that is a world we cannot comprehend just yet. But that to me is the smart money of where we're going. Coal, this is the same relationship. That relationship starts to break down now. That there's no clear subpopulation and a correlation because it's a log chart. It wouldn't really work. But here's the same analysis, where again, thanks, John. Coal resources and the year. So the red is discoveries, and the blue is production. The green's all the way up here now. So the midpoint's around 1975. So for the last 50 years, we've been depleting what reserves that we have. And you could argue that all the good quality coal is gone and we've got the lower quality stuff left. But the difference between the blue and the red is huge. We're nowhere close. We're nowhere near close to depleting coal reserves. But this analysis here, where we're comparing the three, the economy. Let's go back to, now that you've seen all three.
I mean, from an anticipatory standpoint, could we see a run on coal demand as a result?
You could. I would see a run on oil and petroleum products that'll go off the market. I can see a run on gas-fired gensets.
Mm.
That much is pretty clear. Like the people who are actually making money or selling gas-fired gensets are rubbing their hands with glee about what's about to happen. They think.
Yeah, because I'm trying to frame this in a way that satisfies the investors in the audience. Which is, I mean, this is an investing channel, allegedly at least, right? But
I get it. So this chart shows our relationship with oil in particular, and how there is no real plan B. But still, I mean, renewable technology has been around for 25 years. Right, we still are not to the point where we can sort of step off this stuff. Gas is considered the Hail Mary. Now, it's not just buying gas as a commodity, but it's also the infrastructure required to use that gas. That there's going to be a run on that, and that, in truth, is probably going to be the smart investment play.
And you're saying natural gas?
So natural gas, but also the infrastructure required to use it, like the generators, the storage tanks, pipelines, government permitting, all that. Coal, it's just mainly the Chinese who use coal, not just for power generation, but for industrial production. We don't do as much industrial production anymore. So coal is becoming like an industrial set. Anyway, so that's the fossil fuel sequence. And so fossil fuels, it was actually possible for me to do a uranium slide, but I actually didn't get enough time to do that. So maybe next time.
What's the gist on uranium? Do you have like an idea? Have you looked at the data before?
I've looked at the data to show that there's plenty of uranium around for the fleet, power fleet that we've got. The trouble starts when you want to make nuclear power as the primary energy source, and that's when then you've got to expand. I've got a simulation to show you. I think the complexity of the nuclear sector means it will be the foundation that things rest on when things get ugly, but it can't really expand much past where it is now, and something else has got to take its place. It's probably a safe bet to invest in the nuclear industry because the systems that are there now, they will be needed. No question. They will be needed, and they will be defended economically and financially before other systems. They will be as important as food production, for example. All right. So now we're moving into renewables. I've been reading these 3 books, and they actually came out, and the 2 grid books are very interesting. They showed how fragile the grid itself is. So I've been talking about energy systems, but this is the grid that connects those systems together, and that is remarkably fragile. Much more so than I previously appreciated. I can see a situation where the current way of doing things is going to break apart. So instead of having like one big massive power station that then projects power over hundreds of miles or hundreds of kilometers, we're going to have a more decentralized system because the fragility of these things and the requirement for constant maintenance, and what's going to break this is the availability of parts. When a transformer blows, they don't make them in America, they make them in China. And there is a waiting list of about 18 months. Right. And so getting hold of parts, especially as we move into a more difficult, where maintenance is just not done as easily, I can see bad mood on the rise for the maintenance of the grid. So here are some case studies that are out of these 2 books, the 2 on the right. Okay. In 4th September, Alamosa County, Colorado, USA, a big, thick cloud bank moved in. The weather. So the county had like a big solar farm that whole region depended upon. There was an 81% drop in electricity output from that solar farm. Right. So the weather. 5th of January 2009, Columbia River Gorge, USA. They've got a big valley and they've got about 1,000 wind turbines in there. The wind stopped blowing and did not start again for 3 weeks. 19th of May 2010, again, Columbia River Gorge, USA. A storm front moved into the region, and in a single really intense hour, more than 1,000 wind turbines in the region went from relatively normal power generation to spinning really, really fast. And the equivalent of 2 average-sized nuclear power plants of extra power was pushed into the grid with nowhere to go. It was massive, and because they had no storage buffer, it was undumpable, and the grid crashed. Now, the problem here was the company who owned the wind turbines made money by generating power, so they were generating more money than normal. Another company was managing the grid, and so this extra power was destroying their grid. But because they didn't have the authority to tell the other company what to do, it took hours of negotiation back and forth before they shut those wind turbines down. In that time, the whole grid just tripped out, and they had to actually do a black start. And that's the problem. Too many different operators, too many different systems, maintenance not being done as well as it could be, all that. Okay, then we've got, this is the Spain and Portugal case study. So this is what Spain and Portugal looks like during night most of the time. And 28th of April, 2025, they had their blackout. We talked about this last time, right?
Yep.
And so here's the data that showed that. The solar is the orange, and the yellow line there is the demand. So we had far more power than was actually needed. The problem was the variations in the voltage that actually were coming through the grid were so chaotic the grid had to shut down. And that set off a cascade, and the whole peninsula went down. Then they had to do a black start. And so 2 European Union countries had a blackout for about 30 hours. And that caused quite a lot of consternation. The banking sector has paid very close attention to all this, and they've made investment decisions for the future based on this case study.
Wow. Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as a pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020.
So this also puts the idea to the rest that if we build out sol, wind, and solar, to 3 times, the idea was build out 3 times the grid, the size of the grid needed for wind and solar. You don't need a buffer. You just have a 6-hour buffer and you're fine. This problem negates that idea, because if you have a vast amount of chaotic power generation, it all goes off the rails. So wind is variable. This is the chart I showed a couple of times. This actually has the idea that when you have like a peak or a trough, it tends to be over a wide geographical area, and the variations are huge. So 48% in this data set, but those variations of that magnitude can also be seen on a minute-to-minute basis. You can have extended lulls lasting from days to a week, and a couple of weeks in some extreme examples, and can occur to stable high-pressure systems over whole regions. So the grid needs to cater for, say, up to five of these lulls, 5 or 6 or whatever it is, but a couple of days apart. The grid has to be strong enough to recover, and this is the size of the buffer needed. This is the Texas power grid crash in it was one winter. When was that? It was February 2020. This is from Art Berman again. So a severe winter storm came in. It was really, really cold, and lots of things just shut down, and you saw lots of variation, and it was really, really problematic to bring it all back. And it was the gas-fired gas-fired power station industry that saved the day. And without that, the situation would have been much worse.
I see.
So, so there's this data set that came from the PJM RTO grid, 2023. So over a 2-year period, collected the information. There was indeed a drop-off in winter. You know, like the sun in summer is stronger than the sun in winter. Well, here's the data to show that. So I've taken that data. This was actually put into the Hawaii report as an example. If this was, if the solar grid was a self-sustaining network, it would be at 22% capacity, but we would need a 212, a 23-day power buffer, sorry, and you would have to keep that buffer for 212 days. So the idea that the buffer could be 5 to 7 hours, this data set really shows that not to be true. So what I did was, this is the actual, you had a actual power produced. You had an 11.8 gigawatt installed power capacity for wind, and you had 6.3 gigawatts installed capacity for solar. And what you sort of see over winter, there is a drop for solar, but it's comparatively much more well-behaved compared to wind. So if you take that data and you normalize it to 1 megawatt production, how many hours would it produce each month? So this is the idea: can wind and solar buffer each other? And the answer is no, because you can sort of see solar does dip in winter, but it's more well-behaved. Winter, even at the monthly scale, is really chaotic, and the variations are huge. So we've got a 29% variation. So wind and solar cannot buffer each other without large redundancy. And then that redundancy, the vast amount of power, needs to be managed with a buffer between them anyway, to manage the voltage problem. Right, so take this information. This is the Hawaii report. We got some data from Hawaii where the sun shines pretty well, all things considered, and there was a local solar powered grids installation consultant who helped us put this together. We've got the actual values for the different kinds of solar panels, like on a house, our commercial rooftop, parking spaces, the fixed tilt ground mount, and the single axis tracker ground mount. And so across each of the months for Hawaii, what sort of power would you get? How many kilowatts for every installed kilowatt? How many kilowatt hours would you get for every installed kilowatt for each of these systems in those months in the island Oahu in Hawaii? And so we got this data set, and this is the amount of power that we needed to hit for that scenario. But when we actually graphed it out, you have this big dip in winter. And so if this was a standalone system, then the actual power grid would deliver the dotted line halfway. Everything above the dotted line will be captured for storage, and everything below it would have to come from somewhere else. So how big would that be? And so we found that 28.8 days of power storage would be needed. And it would effectively, that quantity of power would be needed to store for 5 months. So right there's your buffer. So the idea of 5 to 7 hours, I'm sorry, that I don't agree with that. Right, so the green transition can't be resourced. Wind and solar are highly variable. Power storage buffer is needed. We need to get through the day-night cycle. When the sun goes down, there's no solar power. But the argument is when the sun goes down, the wind is blowing somewhere. Well, that data set I just showed you, that's not going to help. 3 times build out of wind and solar plus the solar buffer, that won't work. The Spain and Portugal case study shows that to be so. The use of wind and solar to buffer each other, some of the technology to balance vast amounts of electricity with variable frequencies does not yet exist. And the quantities of power just aren't there yet without lots of redundancy. So in the renewable sector, what's called a Dunkelflaute, or dark doldrums, or dark wind lull, they've got a name for this in Germany, is a period of time with little or no energy can be generated with wind and solar at the same time, because there's neither wind nor sunlight. In meteorology, this is known as an anticyclonic gloom. This is a thing. Right. So here's the study. Again, I won't go through it. It's been seen before, but this is the amount of minerals that be required, metals, up against the reserves. The 28-day buffer has turned out to be a reasonable estimate of the buffer that we need. So it's the red that we need to get to. So the grey is reserves, mineral reserves. The white is resources, and the black is estimated resources under the sea. And so this is to generate the first generation of technology. Cars wear out, wind turbines wear out. 20 years later, we have to take them all down and build them again. So the shortfall here is so serious that the whole idea, it's not a question of going out and finding more, because we won't be able to deliver enough in time. Remember, they want this all done by 2050, and that's, 25 years away.
Why 2050?
So 2050 is a number that they throw around. I suspect it's a time that they just picked because it's, they started talking about it in 2000. 50 years from now, we'll get it done.
They used to always reference 20. I mean, back in the day, they used to always reference 2020, and then 2030, and now it's 2050.
And I predict that when we pass 2030, they'll push it out to 2075. What they want is something to say in several decades in the future.
Right.
So the work I'm doing with Harold Sverdrup, where he's done some very, very interesting work of how much resources do we have left, and he's put that in his World 7 simulation. The limits to growth report from 1970 was based on World 3. Well, he's evolved it to World 7, and he said we've probably got enough resources to get to 2050, but after that it's lights out. So our current premise behind our industrial society at the moment is fundamentally flawed. And we need to actually think about a fundamental rethink on everything. So here is the simulation of nuclear that I was telling you about. So if it takes now 5 years to build an average size Generation 3 power plant, build it, commission it, connect it. So instead of 30 years, now it's 5 years. And if we were to add 25 new power plants each year starting from 2025. This was written back in 2021. 2025, this is when we start. And from this year onwards, we're adding 25 new reactors of average size to the fleet while replacing the decommissioned reactors. And we're phasing out all the old Generation 2s and and so on. We get out to 2101, 75 years from now, and we've chewed through all uranium resources of all kinds. Now we can go and find more. That's to be clear. It's not that we're running out of uranium. The point is, if this was to be useful, see here's the uranium nuclear power supplied, what was it, 6% or 7% of primary energy at the time. If we want nuclear to be the primary and only power source behind our civilization, we need to get up to this solid line up here. And in fact, the GTK bulletin has that line moved up to 58,000 terawatt hours. So this is an older study with less things included. But we get to about 60% of the way there. So after 75 years, the nuclear fleet can only produce 68% of the needed electricity. So what it means is conventional nuclear in its current form cannot expand fast enough to save our bacon. We need to we need to do something else. So I support nuclear, great. It does have the Achilles heel of what do we do with the spent fuel, but more on that later. And also, we're not really sort of mature enough as a civilization to run nuclear as what we saw in both Chernobyl and Fukushima. Like, how do we deal with those issues? So anyway, so conventional nuclear can't run. Oh, are you still there?
Yeah, I'm here.
Yeah, okay, good. I actually can't see you, so yeah. All right. All right. Now, last one before we look at this: biomass to biofuels are the answer. So this is in the 2021 report. If we took oil consumption, which was gasoline and diesel, and if we were to produce soy-based diesel and corn-based ethanol, we would need this block of arable land. Arable land. Now, the only arable land we've got at the moment is the red, which is the 11 million kilometres for cropland. That's what we need to compete with. It's about the same of whatever forest is left. So we don't
see.
have the arable land to do it, and here is the water. So that's the amount of fresh water we would need, and this is what we're withdrawing from the planet at the moment. So what this is saying is biofuels are not going to substitute the same quantities of internal combustion engine-based gasoline products. They have their place, and I looked at some unorthodox biomass systems, and that did change the calculus. But the conventional way of doing this, sorry, not going to work.
What category does geothermal fall into?
So geothermal is a separate category of all of its own, and if in the interest of time, I didn't include it. We're all waiting on a breakthrough with drilling, where we can drill down to about 10, 12 kilometers into the crust quickly and cheaply. And then we've got the problem of holding the hole open, and then we've got to get the heat from down there up to the surface fast enough at a usable temperature to generate electricity. So there are still some things to overcome for geothermal. At the moment, it's a relatively small category.
Mm.
But if someone pulls a rabbit out of the hat and then actually manages to solve those problems, well, maybe that becomes an energy source. You have to be open-minded with these things. But conventional thinking, this is what we've got to deal with now. So what's going to happen over the next couple, like if we need to have the new system start to appear within the next couple of years, then what I've shown you now is what we've got to work with. Right, so the entire manufacture sector will have to be fundamentally reinvented. So the current system is very complex, and we'll probably have to simplify as a consequence of reduced available energy. Supply chains are dependent on ease of transport between 6 continents to the point where energy is expended is almost irrelevant. Like, the example of we're going to fish salmon in Scotland, send it to Vietnam to be canned, send the cans back to Scotland to be sold in supermarkets. I mean, that's daft. There are some centralized bottlenecks that can make us strategically very vulnerable. Phasing out fossil fuels and retaining current industrial capability might be impossible in our current form. So we've got to sort of take the blinkers off and take the training wheels off and put our face in the fight. The manufacturing system will have to transition from a global complex system to a regional-based simpler system where the total value chain for a product is completely sourced inside a 200-kilometer radius, or what's that, 120 mile. That's rough calculation I did, but we're looking at a fundamental transformation of all sectors at the same time, because we've put off doing this for a long time. So what I'm about to show you, which is we're coming to the end of the problem now, is my take on how we could approach this. So it's not the end of industrialization, but it's the end of the current way of doing this. Right, so what are we trying to do here? So we want electricity, transport, and manufacture. We want reliable and consistently stable power generation in all weathers in all geographical regions, preferably in concentrated form, preferably with a low materials footprint, a long working life. And when these units come offline, they're designed to be recycled. Come on, really? Minimal waste plume with a very low environmental impact. That's the laundry list. So fossil fuels are going, but if the green transition won't work, what might we do instead? Again, I won't spend too much time in this. This is for completeness for people seeing this for the first time.
Mm-hmm.
At the heart of everything, we will reinvent how we handle our resources. Take the circular economy and evolve it into the resource-balanced economy. The resource-balanced economy is an evolution of Jacques Fresco's resource-based economy, which is as an energy term, basically. I believe liquid fuel fission or thorium molten salt fueled molten salt reactors or small modular reactors are the key. We will have electric vehicles, but they'll be powered by non-lithium ion chemistry systems. I believe coal will be replaced by, it could be replaced by the combustion of iron powder as a thermal fuel. I think the pyrolysis of human sewage to produce syngas would be a way of producing hydrogen, but it also we can recycle that thermal fuel, iron fuel, and ammonia-fueled internal combustion energy technology will do our long-range transport, things like maritime shipping. I won't go too much into that because I'm assuming it's been seen before. So now I'm going to start moving into thorium. So We want a non-fossil fuel paradigm that allows the decentralization, simplification, and contraction of the industrial sector. So this is the thorium molten salt reactor schematic. So what this is thorium is embedded in a salt made with fluoride, the fluoride in your toothpaste, or it could be chloride. There were corrosion problems associated with those compounds, but they've been engineered around apparently. So we put the thorium fluoride salt is not radioactive, so there's no hazard sheet that involves radiation. What you do have is they say the hazard sheet says keep it away from moisture so it doesn't dissolve. So it's much more benign than your conventional nuclear fuel. You put it in the reactor as a salt. You have a neutron source, like a little plug of uranium in there, or even plutonium, and you bombard part of it with neutrons. Some of that fluoride salt transmutes to an isotope of uranium, U-233, which is hot because it's radioactive. It melts the salt. The salt turns to a liquid, and it breathes more neutrons, and more of the fuel is actually then turned into uranium. That liquid then moves around the circuit inside the reactor. So all radiation's inside the reactor. And you have a heat exchange where the heat is then transferred to turn water into steam, which turns a turbine, which generates electricity. Now, the liquid going around the circuit, there's a thing called, if it gets too hot, if the reactor gets too hot, there's a freeze plug where the fuel just gets drained out into emergency dump tanks and it's dealt with completely separately. So then you've got the concept of Doppler broadening, where in the thorium manufacture, it will have in a thorium neutron economy, it will cascade over the top of itself and the reaction will shut down. So there's not one but two things to prevent a Chernobyl-like meltdown. So here is the 1972 report from the Oakland Ridge Nuclear Laboratory, which basically said this technology worked and they wanted permission to build a full-size system. Now, at the time, they didn't have the climate change issue or the resource issue or energy issue. What they did have was the Cold War. And the US military in particular were calling the shots. And what they wanted was a civilian uranium fuel system to actually shield the production of nuclear weapons. So Thorium was said, look, we're not going to make any money with this. It's going to be, the industry will have to shrink in size. There'll be less money to be made. So they killed it. But this proved it worked. And that was the system they actually had running. It ran for 6,000 hours without a problem. So the Chinese have developed their own system. I think there's something like 15 to 20 actual systems, but they've admitted to 2 of them. So this is the 2 megawatt system selling power commercially in the Gobi Desert. And they're now actually sort of manufacturing full-size versions of this. So it's not a question of, does this work? Our geopolitical adversaries are already doing it, and we are being left behind. So here is me wearing a tie for the first time in years. I went to Copenhagen Atomics, and this is a group that based in Copenhagen. They kindly let me into their factory and they allowed me to take this picture. So each commercial reactor planned will have 100 megawatts of thermal heat or 40 megawatts of electricity. So it's a modular system. You can stitch as many of them as you can need together. That's the reactor behind me there. That's how big it is. And the full system sits in a shipping container. Yeah, so a 40-foot shipping container. They're going to sell electricity at 2 cents a kilowatt hour. Where at the moment, electricity on a good day is about, 13, 14 cents kilowatt hour. So what's driving that is 1 gram of thorium or uranium produces around 24 megawatt hours of thermal energy. Right, so a full-size nuclear power plant, like a big nuclear power plant, would consume the equivalent of 800 kilograms of thorium metal in salt in fuel form for a year. So Copenhagen Atomics, they're going to, if all goes well, they'll have reactors available for sale in 2028. They are facing considerable headwinds in terms of the entrenched system would rather this didn't exist. But they're getting there, and I do think they are the future. That's actually the size of the system. I went to see one of these. The complexity of these is it's about the equivalent of a 3-bedroom kit home. And from what they showed me at the factory, that's not their plans to make one of these a day is not a problem. So when they commission these,
when it says non-fission prototype, does that imply that it's a fusion prototype?
No. So they've got to be very careful about what words they use, because there's a lot of people trying to destabilize them legally. So what you've got here is a full system, but it's not actually running. It's not actually sort of got fuel in it, and it's not fissioning stuff away. So that is a picture in their factory in Copenhagen. And so they've got legislation and to actually do a full-scale test with everything together. And my understanding is the relevant authorities are slow-walking that process, which is unfortunate because the Chinese have done it. They've already done it, and we're being left behind. So one of these would arrive on a truck. A separate vehicle will come in with 50 years of fuel, put it in the system to start with, and they would get it going. And then these guys would run the reactor for you. You don't own the reactor. And they sell you the electricity. And then you've got a 5-year maintenance cycle to strip out corroded parts. All right. So here's the. I did a mass balance. I found a published mass balance based on the Fuji system in Japan. It was published in 2007. So this is to generate 1 gigawatt hour of electricity. Uranium's on the left, thorium's on the right. You have to actually put this in a log scale so you can even see it. But the thorium system is orders of magnitude smaller. So the amount of fuel consumed, the amount of waste produced, what have you. So solid fuel, this is your conventional uranium fuel pellet. Most of it is uranium-238, which is not useful. It's not the right isotope to be for the neutron economy. The fuel we want is uranium-235, which is, once they enrich it, is 4%. Natural uranium has about 0.7% of U-235 in it, and that's why they've got to enrich it. But they get them into these pellets, and so all the other elements are shielding it. So you've got shielding happening. A liquid system, when everything's liquid, everything's moving against everything else. And so there's no shielding. And uranium-233 is needed, and all fuel comes in contact with all other particles. And the system consumes approximately 96% of the fuel, whereas the solid fuel uranium consumes about 4% of the fuel. So it's a smaller footprint going in, and it's a much smaller footprint coming out. Here's where it gets interesting. Spent nuclear fuel, right? It's a problem. This is the Achilles heel of the nuclear industry. This is what's got everyone up in arms. Most of it is uranium-238. So it's either an isotope of uranium or an isotope of plutonium is the vast majority of it. But if I was to take that uranium-238 and if I was to bombard it with neutrons, so that here's nuclear waste going in, and if I was to put a small amount of it in a liquid fuel system where it's not shielding anything, but it just sits there and it takes a long time to transmute, it eventually becomes uranium-233, which is the actual fuel. What that means is the molten salt reactors could slowly consume the stockpile of spent nuclear fuel over time, where it converts it to usable nuclear fuel. We've got a solution for the spent nuclear fuel. And that's the first time I've actually sort of seen. At the moment, the plans are, we'll just bury it in these expensive facilities and hope no one notices.
So, I mean, could we use this as a 1-2 punch effectively, where you have your conventional reactors and their spent fuel comes down the pipe to?
Yes, I believe so.
Molten salt?
I believe so. If we're set up for it. This is where the nuclear industry is still in the 1950s. It's got to evolve. If we were to evolve like our technology, say, for electronics has evolved, then what you're referring to there would be quite doable, and you could have a revolution. But what we're doing here is we're contracting the footprint, the physical footprint of the size of the units, the waste plume, and the resources consumed to make it all happen would shrink in size. This is a simplification of complexity, is what's being referred to here. Right, so that's one technology. Here's another. So here's our. How are we doing for time, by the way? Are we good?
We're good, but we might need to wrap it up soon, in the next 10 minutes or so.
Oh, really? Okay. In that case, shall we do a thing where I present Promethean Nexus as a second podcast?
Yeah, let's do that. Let's
Yeah.
let's split it up into parts. Yeah, because we're over an hour now,
Yeah.
and yeah, I have to actually get ready for another podcast coming up later today as well.
Okay. So. Well, this set will probably take another couple of minutes, and then why don't we call it there, and then we'll start.
Sure.
All right. So this is the second piece of technology. It's a self-sustaining thorium fuel gas-cooled reactor. So this is pebble bed. So this is again, it's thorium fuel, and it's again demonstrated in China. So here's your basic system here, and you've got like pebbles, which I'll show you what they are in a moment, but they're put in the top. Radiation is generated, it generates steam, and steam is turned into turns a turbine. Here we're using helium as the gas. So you've got here you've got, this is now a cross section of that. You've now got your pebbles. The pebbles are 60 millimeters in diameter, but at their core, you've got half a 0.5 millimeter of thorium uranium. So the Indians have a thorium reactor going, and they just put the thorium fuel straight in. The problem is the surface of each particle corrodes and transmutes into a material that actually shields the radiation. So you've got to take the fuel out and acid wash it, which is considered a pain in the ass because it's radioactive. What this does by coating it in what's called a triso series of layers is it prevents the surface of each particle from corroding. And so it's the whole amount of material is allowed to decay through the fuel production thing. So particles go on the top, and they take one out the bottom, and they look at each particle, or they test each particle to see, is it still producing heat, and is it still useful as fuel? If it is, it's put back in the top. If it's not, it's sent off for reprocessing and recycling. It's a very simple system. This has two advantages over the MSR. Advantage number one, it's not a liquid. So the MSR has got a liquid system where you've got a hot liquid under pressure moving around a circuit. Now, they are actually sort of taking time to actually make sure it's a walk-away safe system. But if you get a crack in a pipe, you've got a problem. Here, you don't have the liquid. There's nothing to melt down, and there's nothing to leak through a crack. The second advantage is it's very high temperature. So this produces around 950 degrees Celsius, whereas the molten salt reactor only does 560. Where this is useful is 900 degrees in terms of manufacture happens to be a threshold for a lot of processes. For example, producing hydrogen using the sulfur iodine process was rejected because it needed temperatures of 900 degrees, and there was no way of doing that without fossil fuels. But if we had one of these, we could do that. And all of a sudden, hydrogen becomes very, very cheap to make. So this is the picture of the system being installed in China. So this is in 2016. It's up and running. They've got about 20 such systems. So this group called Southern Infrastructure, which I'm in contact with, they are putting together a proposal for someone to do this. Once the capex is done, they could produce electrical power at 1 cent a kilowatt hour. So it's half what Copenhagen are proposing. And more is coming. The capex for a 20 megawatt system is around 440 million USD. I haven't actually looked at what goes into that 440 million, but yeah, that's in terms of what power plants cost, that's actually manageable. The Copenhagen system, I believe, is cheaper and a smaller system. But the things of interest here, it's a 20 megawatt system. So what I'm actually hoping for in my Prometheus project is 80 megawatts of supplied power. So I need 4 of these. Temperature outlet up to 950 degrees Celsius. That's damn impressive. And inherent safety, passive cooling, no meltdown risk at all, no emissions at all. And deployment fits in a container and a 24-month factory build. Right. So that is the end of the tour of duty to the energy system. I was then going to actually start on what we actually need. So let's do this slide and we'll cut here and we'll start next time.
Sure.
Right. So what I've just shown you is conventional thinking is just not going to work. So we need two things to happen. We need an innovation hub that has a mandate to look at unorthodox ideas. We've got lots of ideas, thousands of them, but a lot of them have been rejected by ideology. We need to demonstrate some of those ideas physically at pilot scale. So when an investing group comes in, they say, well, show me an example of this. We've got to be able to show an example. And if not, they say, oh, no, fake news, leave us alone. Right, so this all comes down to, if we were to make an innovation hub, do we have available money and capital to do what we need to do? And this is where things often fall over. So built into this idea is the ability to generate money and capital. So we want electricity and we want thermal heat. And that then has to, well, what natural energy source are we talking about here? Like solar panels get harvest sunshine, wind turbines harvest the wind, coal-fired power stations burn coal. What's the natural energy source I'm proposing here? Then we need raw materials, and then we need the industrial capability to actually harvest all this. I've put together a plan in this website, and this is where we'll stop. This is my plan, and next time we get together, I can describe what this is.
Sounds good. Yeah, we'll end it on a cliffhanger.
So there you have it.
Impressive attention to detail, very impressive analysis as always, Simon, especially, from this is an investor's YouTube channel. So I think it's very pertinent to really understand the natural resource, not just market, but supply chain as a whole, to become a more educated investor in this kind of stuff. So the insights that you're providing, I feel, are very novel for a lot of the people in the audience. I don't anticipate them being able to find a lot of this stuff in terms of the extreme detail and analysis and rigor that you provided. So thank you so much for your time, Simon. Anything else you'd like to quickly shout out or mention before we wrap up here?
Yes, the plan I'm going to propose in part 2, which I'm hoping will happen sometime. I plan to use my knowledge of what I presented to you today. If I was to actually, how do I position myself to make money out of this? And how do I go into business with others? So I'm going to put together a plan to make cheap electricity and cheap diesel fuel, where we control the entire value chain, from the resource all the way out to the product.
Okay, well, let's set up a time for that plan.
So let's do that. So when we finish here, let's do that. Should we do it after the recording or now?
Yeah, after recording.
Yeah, okay, all right.
All right. Well, guys, thank you so much for watching. Simon, thank you for coming on and spending your time with us. If you guys enjoyed this podcast and got value out of it, quite frankly, I don't know how you wouldn't get value out of it. But if you did, give us a like and comment, go Simon, go in the comment section. If you disagreed with anything, that's fine too. But do let me know what you disagreed on. I do, in fact, read all the comments. So drop me your thoughts and let me know, and subscribe to the channel so you don't miss another episode. And liking, subscribing, commenting, doing all the YouTube stuff helps us significantly in the algorithm, in helping boost this channel, this message, and this video and the algorithm. So a little bit certainly goes a long way. And then finally, check us out on Substack at capitalcosm.substack.com to get early access, ad-free versions, and uncensored versions of all of my content, as well as the chance to recommend me future guests on the show and ask questions to any of my upcoming guests. So with all that said, I appreciate your time. Thanks for watching, and I'll catch you later. Bye.